Happy Monday, everyone, and welcome to Monday Money Talks here on Life According to Enrico, where on Mondays we discuss financial things. I hope these little talks help out. Just a disclaimer, as usual, I am not a financial advisor, and nor am I anything dealing with being a broker or anything dealing with financing certifications. I'm just a common guy, just like you. Someone who is trying to figure out how much you need to do to have to survive. So if that's you, welcome here and let's learn together and let me share my wisdom that I gain over life and I could pass it on to you. Let's start off with, like we always do, the stock worksheet that I created. For those of you who have not seen it, you could go into my previous videos on my Money Monday talks, and you could see how we started off with Johnson & Johnson stock. Again, I'm only doing that one stock, and I'm only working that one stock every day to show you guys how this process goes. And yes, it is an aristocrat stock as well as a dividend stock. And again, you can find out more about what aristocrat stocks are if you look at my previous videos. So let's go into the spreadsheet first. Okay, here we are on our spreadsheet. I got to change the update because I'm updating it today. Let's change this cell. There we go. Go here, change this cell. There you go, because today is the 10th. So again, we only focus on the highlighted area. So last week, and we went through all the cells, so I'm not going to go through that again. Last week, we were at the price per share was at 147.04. We just bought one more share, as you can see here. We're at 3, where last Monday we were at 2. We're only buying shares of stock every month, and it'll be 1 to 2 depending on the finances that we have to invest in here. So we're up to 3 shares now. The current value is at 146.12. The amount invested in the stock is 438.35. Where last week we were at 294.08. Dividend yield is still the same, or I'm sorry, the annual dividend rate is still the same. The next dividend payment is still the same. The quarterly payout has gone up. Why do you ask? Again, because of the formula. We have now 3 shares at the next dividend payment amount of $1.24. So that's 3 times $1.24, which now, instead of us looking at $2.48, when the payment comes out, it'll be $3.72 going into reinvesting into J&J. The annual dividend yield went up by 2%. And again, that is because of the dollar amount of the shares divided by the amount of shares that we have. And then the amount of shares needed for desired quarterly payout, we're still looking at 128 at a desired quarterly payout amount of $159. And the amount of shares that we need invested is now at still at 806 shares. That's how many shares we need to target for $1,000 quarterly payment. So 4 times a year we would get $1,000, which would be $4,000 a year. That's if we had 806 shares of stock. And this is just a targeted amount we put in. This here's a calculation of the next dividend times, next dividend times, why isn't it showing here? Oh, I'm sorry. There you go. I'm getting confused. Okay, let me click on this again. You're looking at what the desired target quarterly payout for retirement would be. Again, I put this in myself. And to get how many shares we need would be $1.24. 1,000 divided by $1.24 a share gives you how many shares we need to invest to make $1,000 every quarter. Okay, let's see if I could show you how to purchase a Johnson & Johnson stock. As you can see, we purchased another stock where we're at 3, and I showed you that on a spreadsheet. You click on the Johnson & Johnson ticker, it'll take you to this screen here. And on this screen, you just click the buy button here, and it'll take you over to this screen here. Then you scroll down and you put in the quantity that you want here. And then here I change this. I always put market because I'm trying to just buy it right away at market value. And then you scroll down, you don't touch this. You keep the dividends reinvested because again, you want this to keep going and snowballing effect into the amount that you're ready to retire on. Then after that, you click the review. Now, right now, I can't place it because I don't have enough funds. See, right here it says cash available to buy. I only have $3.66 in the account. So if I did have enough, it'll come here, it'll show you all this, and then you would click place order. And it'll show you, the commission, estimated commission, estimated exchange process, and then it'll show you that estimated total amount, which would be here, which usually would just be your market value of 146. Right now it's at 146.20. As you can see, it keeps changing. But that's that's how you would place your order or buy a stock here on Charles Schwab. So I just wanted to follow up on splitting stocks when I was talking about Nvidia splitting their stocks and Chipotle splitting their stocks and how it works. I'm hearing a lot of people like say, "Oh, hurry up and get the stock, hurry up and get the stock." When a stock splits, just to let you know, so you're not rushing out to buy these stocks to get 10 for 1, or if it's double 2 for 1. If you're buying a stock, if it's at, let's say, $1,000, and that's the cost of that one stock, and it splits 10 to 1, it's going to be now worth $100 per stock. So instead of you having one stock for $1,000, you have 10 stocks that are worth $100 each. So for you to rush out and buy a stock that's about to split for $1,000, you might as well just wait for it to split and then buy the 10 shares. It's not a rush to go out and buy it. When a stock splits, it's usually a benefit when you have already bought the stock at the lowest possible share cost. So for instance, after one of those stocks splits, let's just say the Nvidia. So for example, let's say you purchased the stocks years ago and you purchased, let's say, one stock. We'll keep it simple, one stock. And that stock was at $100. Then a couple of years later, now it's at $1,000 per share. You've made a $900 profit off that stock. So you bought this stock at $100, now it's at $1,000. And now all of a sudden they're saying they're going to split 10 for 1. And it splits. You still made a $900 profit. And now you've got 10 stocks now. So if you wanted to sell off 9 of those stocks, now you got your $900 profit. And you still have that one stock of Nvidia still in your portfolio. That's when you gain something. With a dividend stock, what happens is if it goes up to $1,000 and it splits and you only have one share, now you've got 10 shares. So now you could really benefit from that with those 10 shares, because now with your dividends, it's going to be multiplied by those 10 shares, which is a very good thing. And that's what your dividend payment is going to be out from, is from those 10 shares. So that's when you're really benefiting from a stock split. It's not to benefit going to buy it now at $1,000 and then it splits and now you have 10 shares at $100 each. You might as well just wait for it to split and buy. I mean, instead of rushing to spend $1,000, because you're still going to be spending $1,000 when it splits. I hope that explains a stock split to you. Only time you will gain is if you would have bought them years ago at its lower price break, and then it increase, and then it splits to go back to your lower price break. Because in a growth stock, you now have profited a $900 profit. Where if in a dividend, you will be getting paid more dividends based off the 10 stocks that you have now just gained. That's it. That's the only time that you will really notice that benefit. But if you're going out to buy it now, no, you're not going to see that benefit. So I hope our little walk through our Johnson and Johnson worksheet, as well as filling in some topics about stocks, has answered some questions that you may have, or or maybe even to confirm some of the questions that you have. Later on, we'll be going over more spreadsheets that we have created to track our financials for a living. I will show you what that spreadsheet is, as well as discuss how we came about building it. So with that, I want to say thank you for watching. I hope you've learned a little bit about stocks, a little bit more about stocks. And I hope if you are following and doing the things that I'm doing by purchasing the Johnson & Johnson stock and following our tips, trying to put money in there monthly, I hope you're seeing a little brighter future for your retirement or early retirement, whichever it may be. Thank you for watching. Thank you for all that have subscribed. For those that haven't, please subscribe if you would like. Continue watching this journey. And again, we also have other discussions. I have Wednesday Wisdom Talk, where I provide you the wisdom that I gained over life through my life journey. And we have Friday Fun Days, where I show you a lot of DIY stuff, places I've traveled or places that I would like to travel, new ideas on things that I've discovered and I think would be worth looking into. And again, I'm not a travel travel agency. I'm not a construction or carpenter or anything like that. I'm just a regular guy like you, on just trying to show you what I do and having a good time on Friday. And that's why it's called Fun Day Friday. And the last thing that we do on our channel is Sunday scriptures, where I'll give a verse of something that possibly and hopefully will help you through life for those who are trying to live a righteous life. If you have any questions, please put some comments in there, and if I have an answer, I can fulfill that. Again, on Sunday scriptures, I am not a minister, priest, whatever you want to call it. I'm just a regular Christian who believes in a higher power, who believes in God. So again, I just like to say thank you for watching. Thank you for taking time out of your day to be here with me. And hey, give it a thumbs up, thumbs down, whatever you would like to do. And until our next video, see ya.